we had been running commercials for 10 years, and the number really hadn't changed that much. We went from about 3% to about 9%, but I thought I'll be dead before they'll get to any number that matters. I said, let's try something bold. We knew that this commercial or storyboard had tested 3 times higher than any commercial we had ever run, and the national average on what financial services do. It did 3 times better. It was scary in that I had said I'll do anything if it's tastefully done, but you were really making fun of your name.
Aflac.
We ended up saying, okay, we'll try this. The commercial was going to cost $1 million. We had normally spent about $500,000 or a little less on commercials. We went with it, and it took off. And within a matter of 3 years, we had doubled our sales. Our name recognition had gone to 90%, in the high 80s, 90% eventually it got to. And today we're one of the strongest brands in America.
Welcome to Leadership Next, the podcast about the changing rules of business leadership. I'm Diane Brady. Dan, it's good to be with you. Thanks for joining us.
My pleasure.
Well, I'm catching you during a very good period. You've reported terrific earnings. Your stock has been up. Tell me a little bit about what's going on.
Well, you're right. It is an exciting period. I try to not hit too many highs and too many lows. I like to just methodically make our numbers and go on. But it is fun when everything kind of comes together in a strong manner. And a lot of the things that we had been working on came together and made it for a strong quarter.
You don't strike me as a man who follows your stock price in the way that some people treat it like a game of sports.
I don't. I never have. I'm not going to sell it. So if you're not going to sell it, you don't have to watch it every day. I believe the old story people will ask me, I always say, well, why is stock up? Well, there were more buyers than there were sellers.
Yeah.
And tell them the opposite. There were more sellers than there were buyers. Now, and that's a true statement.
Mm-hmm.
People get on a stock and it gets hot or cold either way. But the rest of it is predominantly driven off your ability to achieve your objectives. And what I look for is, are we achieving our objectives that we promised the street? And if we do that, we'll be all right. And one thing I always try to do is tie compensation back to the objectives that will please the street.
Uh-huh.
And when you do that, you're in pretty good shape. You can feel a lot safer at night that everybody's got their eye on the same thing.
Well, I think Aflac's all about feeling safer at night, isn't it? And I want to, this is a company that has had only 2 CEOs in almost 7 decades. You know, your dad and your 2 uncles started it. You took over almost 35 years ago. Let's start with that. Do you lead any differently now than you'd say even 10, 20 years ago? Don't want to go back to the very beginning, but what have you learned?
I hope I've gotten better. One thing I've done is I have more patience. When I was younger, I didn't have much patience, and they kid me and say I'm always pushing, and I am. But I always liked, when I came into the business, was to go to sales because I liked the objectivity of things versus subjectivity.
Mm-hmm.
And to a great degree, as a CEO, your scorecard is your earnings report and how you did on it. So it's always fun to me to set those objectives and then achieve them. And then to have people that are with you that I've seen over these last 35 years, that a lot of them have retired and moved on, but retired in great financial condition. And that's been fun. So I love seeing people grow internally with the company as well.
I have to ask about that because I know you must get asked a lot. You're at the top of your game. You've just had a terrific quarter, but people might say, Dan, when are you going to retire? Do you think you'll ever retire?
Oh, yeah, I do. I think I will retire. I don't know when. I'm not going to be a very good retiree, but there's a time and place, they say, that you'll know exactly when it's right. I know it's not right now. Um, I really enjoy doing it. I laugh about the fact is I don't do it for nothing because it's just part of me. I think part of that is because my uncle John, who was the CEO,
Yep.
and my dad and his brother started it. And although we never had a lot of money, we had to sell the stock door to door. Um, uh, I've watched it grow, and it's been fun to do that. And so I think there's a little bit more of a pride element with me than it may be for some outside people that come in. And so that's been part of the tradition of the company.
I've always found it fascinating that this is a company that's kind of in deep Georgia, right near Alabama. You get 70% of your sales from Japan. And here in the US, a lot of what people know, obviously the duck, we have to talk about the duck, but it's supplemental, it's disability, it's accident insurance. Let's give people a little bit of a flavor for how that came to be. Let's especially start in Japan, where I know your cancer insurance has really was the genesis of how it all began.
Let me go back to the World's Fair in Osaka, Japan, in 1970.
Uh-huh.
And John Amos, my uncle, who was the CEO, went over to Japan and saw a thriving economy. And back then, he had never seen this, but he saw people wearing surgical masks.
Mm-hmm.
Since COVID, of course, we are well aware of that. But he asked, why are they wearing surgical masks? And they said, well, it's because we've got a cold and we don't want to pass it to someone else. And he went, let me just tell you, anybody that'll do that is health conscious and will buy insurance.
Yep.
And he then spent the next 5 years getting licensed to do business in Japan. This year will mark our 50th anniversary of doing business in Japan. Now, the other thing that was interesting is prior to World War II, the life expectancy of the Japanese were in their late 50s. Today, it's in the 80s. But during the 70s, when their life expectancy started growing so much, they thought they had an epidemic of cancer going on.
Yep.
When in fact, it wasn't an epidemic.
Living
They were
long
living
enough.
long enough to get it. Cancer is a disease of age.
Yep.
So it became very popular. But interestingly enough, when we originally started, we wanted to do a joint venture with a company, and no one wanted to do it with us because in Japan, it's taboo to talk about cancer, or it was. It's not as much anymore. And so you would see people that would die, and you'd read the article in the paper and say they died of a heart attack.
Yeah.
Well, they didn't die of a heart attack. They died of cancer, but they won't put it in there because some families do not want to marry into the family where there's a history of cancer. And so that's the kind of thing. So when we got into the cancer insurance business, it took off. And what we did is we paid X amount of money if you die, but we paid 10 times that amount of money if you died of cancer.
Mm.
And then we paid so much a day for every day you were in the hospital. And that was basically the policy. And it did so well, we actually set up shops within department stores and sold it in department stores. And the first year that we started selling, we sold more insurance that year than the first 15 years that the company was in business in the United States.
It's interesting. I think of you as the consummate salesman. To your point, you started in that. We're on the cusp right now of maybe not curing cancer, but certainly here in the US, it's become a chronic condition. How does that change the calculus of why people buy life insurance? I mean, can we stick with Japan for a
Sure.
second?
Well, first of all, today our policies have much more
Right, of
hospital
course.
benefits in
Yeah.
it, outpatient treatments,
Yeah.
things along that line. And if you think about it, chronic actually is more costly to the policy. in the early years, you either got cancer and you died, or you were cured pretty quickly.
Yep.
Today, as you mentioned, it's chronic in nature, so you might be on those drugs for the rest of your life.
Yep.
And so that is what people need coverage for, is to help fill the gaps that are associated with the hospitalization that they have, or in the case of Japan, the national health care and what they offer. And so as we've seen copays and deductions go up in the United States, we've seen that in Japan with the national health care program as well. And it went from zero deductible to 10 to 20 to now 30%. And so that's out of pocket expenses to them. And the other thing is, in Japan, they give you a ward. But if you want a semi-private room, you have to pay up for it.
Right.
So all of those things add together to help fill. And we sell also hospitalization policies as well to help supplement their existing national health care plan.
As you're talking, I'm thinking a lot about the role that government and regulation plays in this. And I know I'd love to hear your thoughts on the regulatory landscape right now. I mean, when people think about insurance, it's almost like thinking about your finances. It's a topic that induces a lot of stress, a lot of fear. How do you think the regulatory environment is helping or harming our ability to really protect ourselves against the cover that you give us?
I think most people don't understand insurance, and they need some advice or help in knowing what to do. In Japan, it's simpler because everyone's under the same healthcare system.
Right.
So if I grab someone on a train and ask them, they all have the same policy. So they're more likely to know what it is. But in the US, it's with different accounts or payroll deduction accounts or groups. And say Starbucks may be one that we have on payroll, which we do. They have one type of major medical, and, Dr. Pepper is another one that we have. And then a lot of small companies too.
Mm-hmm.
In those cases, they don't know. And what has always helped us is to sell our product in an employer-employee environment.
Mm-hmm.
So the employee then has a level of confidence that if the employer is offering it, even though I'm paying for it, they're saying I probably need it to some degree. And so they're buying the coverage and they're getting a better price because it's being sold in an employer-employee environment where you get three things. You get younger people, you get healthier people, and you get the employer telling them they need to come back to work. So when you have those three elements, you're going to have a healthier block of business, and you can give them better rates than they could if they bought it on an individual basis. So the consumer feels safer because the employer offers it. And all in all, we can give higher benefits and offer better products through that distribution channel, both in the US and in Japan.
What if those benefits are taxed? Because that's one of the things that people talk about now. I mean, do you think government understands the role that you play? Let's take it here in the US.
Well, they have in Japan never really tried to tax benefits.
Right.
They considered it in the United States, but they decided not to do it within the last year or so.
Yeah.
What I would say is if you've paid the premiums, I don't think you don't make money in healthcare. You're going to, as a general rule, you've got expenses that are actual expenses, but then you have expenses that are non-medical.
Yeah.
For example, someone has cancer, they have it in Columbus where our headquarters are located. They need to go to Johns Hopkins or Emory or any of the major Sloan Kettering. And yes, hospitalization would be covered at Sloan Kettering in New York City, but you're going to either have to sleep in the room where your spouse is, or you're going to have to get a hotel room. It's not going to cover the hotel room in New York City. It's not going to cover, most of them won't cover your airfare as a patient, but it certainly won't cover the spouse. So there are all these outside expenses that you don't think of with illnesses that can really run up the
Yeah.
tab and take a lot of money out of pocket. Well, those people that are in that situation, they need the money. I
Yeah, it's
mean,
true.
I
It's
don't
why
know
most people go
anybody that buys
bankrupt.
health insurance to make money.
Yeah.
They're
No, it's
only doing
absolutely
it
true.
to figure out how to cover the gaps that are created in their coverage.
Let's talk about the duck. I mean, I know that you get asked about it a lot, but in all honesty, you picked it. You picked the duck over Ray Romano way back when.
That's
Um,
right.
how,
You got a
talk
good memory.
talk about the Aflac duck. I mean, it. I think you've got more brand recognition than certainly any insurer, but probably most consumer products out there in the U.S. now. What was it about the duck that appealed to you?
Well, I'm a big believer in research. Don't tell me you think, prove to me statistically that that's the case. And so what we did is we had been running commercials for 10 years, and the number really hadn't changed that much. We went from about 3% to about 9%, but I thought I'll be dead before they'll get to any number that matters.
This is
And
brand
so
recognition.
I'm sorry.
You said the 9%, that's brand recognition of Aflac.
Brand, I'm
Yeah,
sorry,
right.
brand recognition. And so I said, let's try something bold. And so we went out to different companies, let them bid or come up with their ideas. And then we had storyboards and saw it. And one was the Aflac duck. And it was scary in that I had said
Scary?
I'll do anything if it's tastefully done, but you were really making fun of your name.
Mm-hmm.
And having a duck do it, I was a nervous wreck. But in business, and I majored in risk management and insurance, is that there are three principles of risk management and insurance. Don't risk a lot for a little, don't risk more than you can afford to lose, and consider the odds.
Mm-hmm.
And we knew that this commercial or storyboard had tested 3 times higher than any commercial we had ever run, and the national average on what financial services do. It did
Mm-hmm.
3 times better. And financial services is a really difficult area. And insurance does worse than banks, because banks you interact with daily, weekly, or whatever, writing checks or
Yeah.
whatever. But an insurance company, you may not have any issues until you have a hospitalization claim or some hospital issue, or unfortunately death. So you don't interact as much, and the smaller amount of impact you have, the lower the name recognition is. So we ended up saying, okay, we'll try this. The commercial was going to cost $1 million. We had normally spent about 500,000 or a little less on commercials. We went with it on Millennial Day, which would have been 2000, January 1, 2000,
Yep.
and it took off. And within a matter of 3 years, we had doubled our sales. Our name recognition had gone to 90%, in the high 80s, 90% eventually it got to. And today we're one of the strongest brands in America.
Yeah, we have a couple of your ducks around here actually. Squeeze their belly
Good.
and out it
You
comes.
need
So
more,
they're
let me know. I'll
brand
send you more.
ambassadors, the whole lot of us. You mentioned that you studied risk management. I want to take it back to the personal. I mentioned at the beginning that you're the second generation now to lead this company. And I know your kids have, been involved. How do you do how do you bring a family business, which even though I know it's not controlled by you, I still think of it as a family business and those values come through. How do you pass that along to the next generation? Because that's one of the biggest challenges of any, leader of a family owned company or family controlled or family run company that I meet.
You try to put them in a position where they can see if they like the business, enjoy the business, I've got one child that wanted to get involved and liked it, and then decided that wasn't for him, that he wanted to do private equity,
Yep.
and decided to do it. I've got another one that's in the fashion business, and she has a couple of stores, and I've got I don't have any brothers or sisters, but I have first cousins who have children that work for the company,
Hmm.
and so you just open the door and let them have an opportunity to do well, but they've got to pull their load. I remember my dad, when I told him I wanted to go in sales, he had been in sales, and he said, "Now you do understand, son, that if you do poorly, your uncle isn't going to bail you out, nor am I. And
Hmm.
I'm going to be the one that comes in and tell you need to get out of the business." And I said, "Yes, sir. I know when you said it subjective, you can debate it. But when you say you got to do X or you make or break, then I know what that means. But on the other hand, I know there's that Sonny Boy syndrome of people that say, well, you got it because of family. You may have gotten a break because you were family, but you don't keep it because of that.
Right.
And
Exactly.
so you have to prove yourself. So I've always said, go into an area that is objective, not subjective, and you can see what happens.
So let's end with what else is on your radar that you want to put on mine, whether it's what's around the corner for the company, Dan, or what's intriguing to you right now.
I am a very focused human being. Uh, and I like to stay focused. I tell my employees all the time, I like evolution, not revolution.
Hmm.
And so I want to constantly be growing, but I want to be growing in a manner that we can control. So as the market is changing, it's opened doors for us to get into other business, like for example, dental and vision, that we bought a small company and we're into that business and we think it has potential.
Hmm.
And there's this other business we call plaids, but it deals with disability and handling the administration. These are things I think are going to grow our business long term. And so I'm excited about the future. It is interesting times, and with AI and all the things that are out there, I still believe consumers want to handle claims with an individual, not a computer.
Hmm.
And so I always see the sales force as being an important opportunity. For example, at our company, we have if you have cancer claims, we've got special lines that you call in that are it's all individuals, no computer driven.
Yeah.
For a wellness claim that you're healthy, you had a test and you want to get paid on it, the computer will handle it. But important issues, we want to make sure people feel important and that they know we care about them. And so that's one of our jobs is to protect our brand. You know, the Aflac duck is worth a lot of money in terms of brand recognition. And it takes a lifetime to build a brand, and it takes about 1 minute to ruin a brand.
Uh-huh.
And how you protect it and what you do is so important.
I think one of my other favorite quotes from you is the fact that I guess policies are sold, not bought, right? And that
That's
human
exactly right.
connection. Um, I think I can't think of wiser words than that, and sometimes we forget it. Dan, it's a pleasure to see you, pleasure to speak with you, and I really appreciate you joining us.
Thank you for having me.